with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's go right into the chart, shall we? Bada bing, bada boom. Here we go. Well, we had this 21-day nice consolidation between these channels of the 0.65 and the 786 region, and we got that nice little bounce off the 706 out of here on the outskirts of this pitch fan, and now we are reaching the 886 region of that retrace zone of this mean reversion pitch fan idea. And where are we at currently? Well, we are getting rejected off of these daily rejection points. We still have a lot more ground to cover to reclaim this range. Could we see a handle retrace into here over the weekend? It is Run for Profit Friday. Are they going to set up into going into some of these levels? That is the question. Let's go into the liquidity, shall we? What is the heat map? Well, that is when people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and they reclaim their money from them as such. So let's go see where that is in the charts, shall we? How's everyone doing out there? Booyah, Weatherman in the house. Thanks for stopping on in, and let's get your liquidity update. So on the 1 minute time frame, we are seeing 24 billion in juiciness below. The longs are imbalanced, and they should consider paying themselves at some stage because the shorts are getting wrecked to oblivion, and they will come for the longs after that. That's just the name of the game. Wreck the shorts, wreck the longs, wreck the shorts, wreck the longs. That's all it does. It's just an oscillation, and these guys that opened on this trade to the upside, 278 million in 100x instantly grabbed in the morning in Asia, and then they came back up. They left some 278 million down below here, and they are coming back with the fury to say no thank you, man. We are coming for you at $30,252. This 278 50x character is a noodle on to the right here that is going by buying it back and giving some longs more ideas as they enter 75, 51, 75 more $1 million. And this 146 million of shorts could be a V shape that they come back to before they continue down for these bubbles too. So that is something to note immediately. We're getting better at reading this quickly because we do it every single day. So we're looking at this here. We were talking about these characters down below here. Let's just go zoom in on these guys because they could be targets over the weekend. This 310 million 100x character down at 29.33. His partner in crime at 29 even on the 50x account. Then you got some 25x 290 million, some 290 million at 29.47. So this region is interesting to me, most notably the 100x guys, because they're getting paid 100 times their margin. So 310 million times 100 is a lot of money, so they might just come back for those guys just to spite them for not paying themselves, and that's what they like to do. And you got a lot of liquidity down below on that time frame, 24 billion, I believe it's at right now. Yeah, 24 billion. So why is it that it's going up right now? Well, if you look to the higher time frames, this is where you juxtapose internal versus external liquidity. You can Google all these concepts yourself and fall into rabbit holes within rabbit holes. So this is internal liquidity. Let's go into external liquidity. So on the 12-hour time frame, you are seeing some previous snatch to the upside come down into the downside liquidity pools on the 12-hour time frame. Pretty much even Steven on the 12-hour always, so I just skip it. On the 7-day, let's take a look. 7 days still has some about 10 billion up here at 31.3. We were talking about 31.2 as a potential interest region yesterday. Did we tap that exactly? We did not. So we could see a 31.2 hit because on the higher time frames we do see some pools starting to form. Not on this 7-day just yet. The 7-day does show that after snatching up some of the shorts up here, that you are seeing this long juiciness to come back down to in terms of imbalance. You are seeing that heat to the upside still exist all the way up to 31.3. Let's go to the monthly. We're trying to make these short but sweet these days. I want to get funded as soon as possible, so we're diving into the stock markets these days to join the other 4 or 5 traders in the Momentum Master Discord to be funded. Shout out to my men and women in that Discord group. So it looks like we got up to 31,100 and took out those pools of $19 billion.
Fatality.
As they liquidate those shorts on their path to the upside, and it looks like they knocked out those pools. We were talking about as you knock out these pools to the upside, the SPY balloons that are holding you up start to succumb to gravity, and we could fall very quickly. We did this before when we were taking out pools at 29.2 and 29.5, and those pops of those balloons cause us to drop like a rock. Drop like a rock. So are we going to see ourselves drop like a rock and somewhat Bart Simpson back down? I have no idea, but there are pools down below here at 25k and below that become heavier as you release this liquidity, you see? So these pools are building to 34k. 34k does not happen overnight. So anyone drawing their flags calling for 34k should check their euphoria at the door, and you should think about these healthy retrace. We took 21 days of consolidation just to go up this 9% to eat these guys up above. So everything needs to come in due process and due time. So always think about the retrace after a move like that to the upside. So we're going to take a look at the 3-month. This was where I started to look at 31.2 as a concept yesterday. You're seeing 3138 billion, or 31k even, 38 billion, 31.2, 36 billion. So are we going to see this 31.2 popped in its entirety? I have no idea, but it's why we were saying that the possibility of coming up to grab this was kind of higher because of what existed above versus below. But we also put out the warning that as you pop these things, there's more heat down below here at 25k, 41 billion, nearly 100 billion in this region, another 100 billion or so at 22.6, and your happy campers down below 19k, over 300 billion dollars down here. So that becomes dead weight as you look above, and you do see pools starting to form up to 34.8 on the yearly time frame as well. So these pools of 18 billion here and there are not out of the question, but you are getting sparse liquidity between 31.4 and 32.4 to be realistic. So basically within this $1,000 range, they need to induce some more short liquidity. So a retrace to induce that short liquidity and stack up this 33 region up to 34 could be a nice move to go down and grab some of this and then start to make that narrative get thicker. Let's go to the 6-month. So they released that 31.2 of $51 billion. Shout out to those shorts, rest in peace.
Fatality.
So they got destroyed, and there's kind of a sparse thing, as we were saying, up to that 32.4 region. Not so much interest to go higher than that, if you ask me. Now, if we go to the yearly time frame, before we do that, let's just look at what's below. That's a lot of juiciness down below. Once again, 22.5, 25k, sub 20k. There's a lot all the way down to 15k, just hundreds and hundreds of billions of dollars just holding us up as dead weight, like crabs at the bottom of the barrel trying to pull us back down, unless they decide to cash out at some point. So let's look at the yearly time frame. The yearly time frame zooms out in terms of what the scalability of their the billions represent. Let's wait for that to load. Woot woot, music is so dope today. Yeah, I can't get off the Shingo Nakamura, man. He's awesome. When does my nizzle in the house? What's up, gang? Fatality. So we're at that 886 region, the daily support rejection on this zone so far. So if we get rejected here and rejected there, then we come back down to this for a test of that support, and we could go down from there. And if we go from this region, then we're back down to our local support in this region here, 29.74. All right, did it finish loading? Not this one, this one. All right. So the yearly time frame was the thing that I was noting back during the weekend about how this path to the upside is starting to look interesting, how they have that $84 billion on the higher time frame at 34.8 and starting to pave the double-digit billions up to that region from 32k, but you do have that sparseness from 32 down to 30,800, although you do have 100 billion up there at 30,008. So the interesting thing to note is it starts to taper at 31.2. This updates every day, so this will be gone in the morning. So this candle will have stabbed and eaten this, because we just already went up to that region. So this pool has been taken. This 150 billion on the yearly time frame is gone. They are out of the game. Sayonara, it's gone. And then so we have the 31.2 and above, 32k, 36. 31.6 is sparse on that, and 32 is kind of sparse. So same kind of story applies. You have room to build below, or above rather, and however, coming down to the 29.2, 33 billion down here could be your little bounce bullish order block. If not, you come down to this region. Not much in liquidity, and 28 until you reach 27.2. So that's on the yearly time frame. So the yearly time frame makes this yellow 200 billion or more. So unless you have 200 billion or more, it's not going to turn yellow. So it looks kind of sparse, but it's actually not, because the scale is very different on this external liquidity range. But this is why when we came to that 19.5 region, I was saying they were eventually going to come back for this 25.6, because that was $178 billion there. I just didn't expect them to come back with such a fury, but they did during that Silicon Valley Bank FUD news. They just said, okay, you guys aren't going to open longs, well, we'll just take it now, thank you. And they needed that excuse to move the price without paying people, and they did it. And they ate all this region up here filled with short liquidity, as everyone expected lower prices. And that was a perfect 618 bounce, so shout out to the happy campers at the 19.5 region. You could consider frugally trimming, or at least paying yourself for that nice move to the upside. Might be a retrace in order. Let's go into the charts, shall we? Let's go in here, mon ami. So we nearly reached the one region of this trend-based fib extension tool from this impulse here on the daily time frame to the upside. So we have this impulse and retrace idea that occurred, and that projects out this idea within the bigger picture. So the bigger picture impulse retrace idea is projecting out these paths, which we previously reached the 1 level on and had 21 days of consolidation at the 1 level while people took profit and considered re-entry, and then we bounced out into that region. So this region has been honoring well to this higher time frame impulse, and within that you are also seeing another impulse retrace that projects out these small little paths to the upside, and then you have other ones impulse retrace on the daily that to honor as well. And so we were saying yesterday, what were we saying yesterday? You can go back and look at this yourself. We said if we maintain that 236 region, you can expect a bounce to the upside. So we maintain this 236 region on this mini impulse. This is an hourly time frame, so you could do that same 3 clicks with your trend-based fib. You do impulse and retrace, impulse and retrace. Where is your trend-based fib extension? Well, it's right next to your retracement, right beneath it rather. Trend-based fib extension tool. You click that and you go impulse to the upside and the retrace, and contained within that math is a path to the upside. So this 236 region, which we held as of the live yesterday, you came back, you retested the 236, shot up. We did not reach any of these regions up here at that 65706, but you did see that shoot up to the upside. This looks like the extended M liquidity grab based off the fury in which they are finally coming back. It looks like they exhausted the shorts and induced the euphoria of the longs enough to eat into this liquidity with a fury. Let's go see how the longs are getting liquidated right now. Looks like they're going to eat below 30k for that run for profit Friday. Oh my gosh, they are going for the gold here as they went in to grab this went and grabbed this guy, and they induced some more longs as they started to pave the path below. These 104, as you see, these big bubbles appear here. The bigger the bubbles in shorts, the more likely a V-shaped recovery to come grab them will be, but that will be after they reclaim some of this money down here at 29.6 and below. But it could happen at any time if you look for that bullish divergence. They did release that guy just there, so you could get some bullish divergence at any point in the game. We'll get into our indicators in a moment, but this is how you use trend-based fib extension tools, and if you honor the 236 of those extensions, then those 236s take you to the upside. We're going to remove this now because it's just too many fibs within fibs there, and it's done. It played its course. So now we're looking at a simple fib retracement idea. We can just go to the top of the channel here and try to make this frugal and say that the 29k region of a 618 bounce would be good. These were our targets of the liquidity balls that we're seeing here. That's what these little arrows represent, is where their location is to be gobbled up. And beneath that, let's see what's at 29k at the 618 for this impulse up, shall we? Let's see what it is at 29k. It looks like down here in this region there's a lot of stacked longs, if I do say so myself. So there is 310 million character on 50x at 29, nearly 29 even. You got 100x, 276 million on 100x, getting paid pretty pennies at 28.74. Let's see where that is. 28.74. 28.74 puts you, yeah, exactly in line with that 706 bounce. So we already marked that character. That's the 100x guy, and then this is the other 100x guy. So we marked the 100x guys because those guys are getting paid very pretty sums of money. So they're juicy targets to be aimed at by the market maker's algorithm. So we're seeing this fury of the extended M. What is the extended M? Well, you can look up information like this at your own leisure, but it looks like it's a higher time frame M formation that could continue you down lower if you continue past that neckline. So you just get the neckline to the top. You could just do a frugal path for that and move that over here, and that most likely takes you to the 618 region. So if you don't honor the neck, you could come down to the 618. It is the weekly thing. I'd like to see the retrace anyway. It just makes more sense. You see a nice healthy move, you retrace, and then if you bounce off support here, which would coincide with those levels, then you could see yourself a continuation to those higher time frames while you induce the levels of the higher time frames to enter shorts and then get thicker. So not only are you paying, market makers getting paid by eating the longs, they're inducing the shorts to make their journey more incentivized to go back up. It's just not sustainable otherwise. So you know,
accessing data.
What? Wait, what's going on? Hello? Are you guys seeing this? What? Huh?
All systems operational.
I was the last of the archivists tasked to maintain and monitor the power source for the simulacrum. Everyone else had fallen into madness, simulations within simulations, lost in infinite loops, forgetting about linear time entirely. They left me with the sense of self and the autonomy to detect and diagnose any anomalies. Little did they know the anomaly arose from the source itself, the 0-point energy. It's been at least a year I've been feeling incarnations of myself in the past. Positronic pairing was something they'd overlooked. They assumed each electron was unique. Who would have thought this entire farce to be a single particle? I must send a message to an incarnation of myself in the past. I downloaded all I could as to how we got here, from the microplastics that stopped our ability to procreate to the algorithms that captivate and control us. Perhaps this impulse can steer momentum on a better course. What the? Hello? Hello? Where am I? Testing? What's going on? This is... Whoa, I can see the future? Oh my gosh, we're all connected? Interesting. Let's go back to the charts if we can. Oh, there we go. Oh, cool. So it looks like we had a previous crossover event with the baselines fatiguing over the price quite nicely on the hourly here, showing a sign of fatigue as if it's suppressing the price down here. And we broke down from the cloud, and we're at the top of this Keltner channel, an ATR-based Bollinger Band type idea. What is this thing? Momentummaster.info, link in the description to find out more. Interesting. So, oh, we saw 5s down here and we shot up, and we're seeing 5s up here and we're starting to come down. That's really convenient. What is this thing? Let's go down to features and see. Stochastic array. What is this? Momentum Master Ultimate. You can toggle everything. And the stochastic array. Ah, I see. It's a formula that monitors all these time frames. Wow, that's pretty cool. So, yeah, let's go to the higher time frame then and see how it holds up in court. That was all done live. I love performing it live. I got the script in front of me. I like these things. In the future, I will get some other skits like that. I see a monk guy sending some love from the past in the future. Cloud Atlas style, if you know that movie. It's kind of like inspired by that, I guess. So we're on the daily time frame. We are, one thing to note on the daily time frame, or at the 6-hour time frame, was we had that suppression effect. It never previously crossed back over on this. Come on, load for me, baby. Here we go. So we had this kind of starting to appear above price, and we had this cross down event. You did see this come up, but you were starting to get some fatigue here. And we were seeing that. Let's see if that cascaded to a higher time frame on the 8-hour and above. Nothing here. So we'll start to make our way up to the 24-hour, the daily, if you don't mind. What are these arrows? Well, in Momentum Master, it accumulates the volume over all the time frames to make a cumulative time frame volume delta, which basically takes the disparity across all the time frames and adds them up. So when you see these long arrows getting very long, even though we're seeing this indecision doji here, it's suggesting that there's positions of volume, of buying volume accumulating here, and we shot up. And so they can give you kind of hints of the move to the downside and the upside in that cumulative time frame way. I'm still not done with my journey on this project. We are adding new features daily that are not necessarily listed on the website. So the interesting thing to note on the 22-hour and the 12-hour was we had that cloud thin. We held it strong on that 618 and we bounced up here. We are reaching the outskirts though of the 22, and let me get rid of these for now. I'm just looking at some different volume things. These ideas we'll possibly incorporate in the future. And let's see, you're getting overbought. You are seeing bearish divergence on the RSI here on the 22, which could start playing out here. Close in 6 hours alongside the daily. You have one candle closing 2 hours before the daily, and then the candle closing on the daily. Why do I like the 22 and why do I swear by it? Well, it's like an unsyncopated beat, like a rhythm, like 11/6 or something. It's just like a jazzy kind of unsyncopated rhythm, which within that rhythm creates the laminar flow for the probability to revolve around those candles, resetting the probabilities in a nice manner, giving you those pockets
to the upside and downside very nicely, and other people have co-opted that without giving shout out, but that's okay. The truth will be told in time. So yeah, these are interesting ideas about the 22-hour time frame. You are seeing that baseline get above, and you have the Keltner channel. What goes up must come down, so we could come down to this center cloud area. It would be a nice support region kiss to the cloud on the 22. Wouldn't be out of the question if I do say so myself. Now, if we go to the daily, I believe we're getting overbought if my screener serves me correctly. One thing we're also saying about the daily is we were getting rejected off the adaptive. We have flipped and closed above the adaptive, so that adaptive should ideally hold if we come back to kiss it at some stage. Where would that level be? It would be at 28,652. So if we come down into this golden pocket of that fib, it coincides nicely with the confluence of that 100x character we went over nicely a moment ago. So this daily time frame does seem like some sort of target point to come back and test support of the adaptive moving average. What is the adaptive moving average? Also listed on the nice website for you, adaptive moving average. Go ahead and check it out, read about it. I'm not going to tell you anymore. So the 3-day also getting overbought, as is the weekly. We don't need to switch between time frames. It's all nicely displayed bottom left here. And we'll just leave it at that. We save yourselves time and effort, and you can set alerts to all of this with our dynamic alert system. So let's go to the 6 hour, shall we? Let's start hopping into Momentum Master B as we turn our heads up display to infrared mode and see what's going on below in the oscillator world. So we have the Class C bearish divergence on the money flow and RSI starting to play out here. 5 time frames overbought with the cross down event rather. You're starting to see some interest. We're starting to see some interest in buying here, which shot us up. You are getting some buying volume despite this red candle in the overall disparity of everything. So it is still showing interest in longs, but they could chew into that as they reset some of the Williams here. The Williams average has come up to the Williams for this nice tight range where you start to see these alarms appear, and then when these alarms appear with these bearish divergence lock-ins, then you could see these nasty dumps while they start to reset some of the Williams on the 6 hour time frame. The 6 and the 12 and the 22 also discoveries of yours truly, but of course they're not my time frames. I don't invent these things. You just back test them and see what holds up in court. The 22 though was quite a discovery because I was looking into how laminar flow works. Scientifically speaking, you can look at turbulent versus laminar flow. Let's just do that. Turbulent versus laminar flow. They have some interesting documentaries you can watch to learn about that stuff. This is what you would see, but talking about obstacles in your path. So I was looking at candlesticks as the obstacles that create the turbulent flow, and I was thinking about time as these time eddies and the flow of probability going around these things as time. So you can read about that at your leisure. I teach science and make science curriculum stuff, so I was thinking about that for whatever reason and then tried to correlate that into the charts. But that's kind of how the probabilities reset, is using that turbulent and laminar flow idea. That's how these reset in a nice manner throughout the time frames. So we're seeing that divergence and the Williams getting overbought, so you could see some sort of chill out here. Although the previous 21 days of consolidation, we had the Williams barely come down below 50, so it could take some time to reset that on the 12 hour if you're remaining bullish for a long time. So we talked about the idea of potentially staying in that range of the ascending channel of that pitch fan for another inordinate amount of time to continue our path to the upside. Doesn't mean we will come immediately down. So this also being overbought on the Williams here. The MACD also showing signs of crossing down here. Let's zoom in just a little bit more. What is this MACD formula? It's not listed on the website at all, but it is a normalized MACD, which was an extreme pain in the butt to make. But what it does is it puts the MACD within a framework of 100 to -100 so that it can flow between these domains, and it's very leading. So it's a leading MACD formula. You can turn that on with the histogram if you like. You can fill it like an oscillating wave. So it will fill that like a stochastic and make it colorful if you like. But yeah, all the stuff, all the features are editable. Let's go to the 4-hour, shall we? Let's see. 4-hour was overbought. You had seen that play to the upside play out quite nicely since Thursday, and we didn't push it any further. It looks like it was a stop hunt rise. You saw a bunch of blue candles. What does the blue candle signify under the PVSRA strategy? It signifies stop hunts. So this is a stop hunt rise drop idea for that thing. You're getting a alarm, if you will, on the Williams, which could just come down with the fury here on the 4-hour. Last time we see those type of events play out here, it meandered around for a little bit before dumping quite significantly on that 4-hour time frame. So is that going to be the case over the weekend or something where you do something like this? I don't know. It could happen right here and now. Let's go to a lower time frame on the hourly. The hourly is getting exhausted here and suppressed. However, just because the stochastic RSI is low does not mean you should go long here. You do see this kind of eyeball duck-billed platypus thing with the momentum waves open here on the Williams. The alarm telling you that this could play out to its in its full entirety, just like it did here, where it got suppressed on the hourly for a good 2-3 days before starting to play out. So just something to think about before you hop on into anything. Let's go look at the 15-minute. 15-minute also oversold currently, and the Williams coming down nicely into the green with the MACD traversing the domains back down to it, saying, hey, what's up, man? You ready to go to the upside or not? And 15-minute seeing some interest on the cumulative time frame delta here as people start to insert some liquidity. Let's go look at the liquidity that they took out of the game, and is that repossession on the market maker's part, or is that actual interest from people? Looks like it might be a cash-in of shorts, causing the bounce to consume the late shorts here. So some shorts are closing and possibly absorbing these guys who entered the party late. These big bubbles are bigger than these bubbles, so they're basically eating these guys, cannibalizing their own, shorts cannibalizing their own as they come back into here to continue. What is this retrace idea? Well, within the framework of the Momentum Master Discord, these are not concepts that I just made up. These are smart money concepts about retracement. So you retrace, and before you continue to that downside to fill these voids, and the liquidity voids are prominent with locations of these large amounts of liquidity. So this drop to the downside paid quite handsomely to this character at 100x, so they could come back to that guy and take him out. And if they induce some longs at that time, that can continue their journey, fund the journey to sell off, because those shorts create buy side liquidity, which they buy back their Bitcoin and then sell it off to force market sell to make it drop lower. So it's a game of cat and mouse. It's not bulls versus bears, it's liquidity versus liquidity providers. And we are the liquidity and they are the providers of that liquidity, and they come take that back with fury every single time. So you have to always reward yourself for your victories and protect yourself from losses. Alright, so let's go back, shall we, and see what's going on. It looks like it's just a bounce of the liquidity they're repossessing, and they could come back, fill these voids a little bit. When you get the cloud to be thick, what is the cloud? Well, it's a trend cloud formula. You can go down here, hit trend cloud, read about it. When the cloud's thick like this, you get rejected on it. It also coincides with the liquidity. So if you don't even know about liquidity, you don't know about any of that, you don't care about it, this got you covered. So you would see these bounces off the cloud, and the cloud provides you that continuation, but it's also recovering the gap and getting the liquidity too. So it's all just confluence on top of confluence on top of confluence. The coherence from the signal from the noise. I was talking to my friend today about ants. Let me tell you a little bit of interesting story about ants, shall we? So let's just hold up here. So we'll go to the up close and personal. So ants are pretty cool creatures. I was telling him about, he was saying it's all chaotic, and I said, no, it's order ab chao. The order is constructed from the chaos into coherent signals that most things like to follow in a pattern. So the universe is dying a cold death, right? It's dying to entropy, basically. You had the Big Bang, created a protostar, created all the elements, that protostar died, created Earth, and then that Earth peopled. And you are the people, I am the people, all of the things, the elements, the iron in your blood came from the death of a dying star. So everything's dying, and everything's going to entropy, to a cold death. So it's complexifying, getting more intricate in its connections to try to preserve its energy, even though energy doesn't just ever get destroyed, but that's beside the point. Anyway, you have complex systems like ants, right? So the ants like to fall in line in their little habitual patterns to make sense of the universe, and they communicate with chemicals to get to the food source. And then you always have divergent ants that a certain percentage of just randomly seem to go in a certain direction and end up in your kitchen. So those ants kind of basically what's the word, the divergent ants are the ones that find the new food source or find the way to keep the colony alive. So the ones that, if every ant fell in line and it was just ordo ab ordo, then everything would just cease to be comprehensible, because there would be no chaos element. So the randomness element within everything is what keeps everything sustained. So the divergent ants in society, with humans as well, the Elon Musks, the visionaries, the people looking at things in a deviant kind of divergent way, those are the ones that fuel society forward, as opposed to those that try to remain within their habits and patterns and whatnot. Anyway, I don't know how I got on this topic, but I was talking about something or other, but I just thought that was interesting to share. We were talking about ordo ab chao, order out of chaos, and everything being kind of a pattern within a pattern, I guess was the idea. So even though it seems chaotic and random, there's a underlying ordo that's trying to come out of the chaos. So there is a signal trying to appear out of the noise, and you're trying to look for that confluence, that ordo appearing out of the chaos. And that's kind of what Momentum Master is about. It takes that chaos and makes it orderly, if you will. Hope that made sense. Sorry, my brain goes in random directions sometimes. I think about a lot of different things. All right, so are we coming down to the adaptive here on the 15-minute? That could be a test of the lows here at 29,765. It looks like the 15-minute is getting kind of suppressed here. The hourly as well. You're going to see a bounce at some point, but this is the type of fury in this move is not the type of thing I like to long into. Some people might find that to be fun, but not me. I would wait for a little bit more divergence play to play out. We've seen a lot of long upside stuff, so that, and the shorts are fatigued, so they could just keep eating into the longs for days because everyone's bullish. So let's go see a different time frame. Let's just do the 33 time frame, shall we? Never tried that in a while. Okay, you're oversold on that. The Williams still coming down. You're at the weighted average for that. Interesting. normally traded time frame. Let's just go to the 30. The divergent ants. Eyeball duckbill platypus thing. Yeah. So yeah, I mean, where are we going from here? Are we going down more? Or was this just a liquidity grab to go up? This is Run for Profit Friday. You should know your weekly structure and the Asian, London, and New York range and the times they open and close. This is a free indicator for you. It's ICT kill zones. You can find out where these little times open, and Asia likes to dump it a lot of the time, so you'll see these dumps in the Asian session, and you can see how they complement moves too. So here they took it up completely throughout all three ranges, but a lot of times they do Asia does something, London either complements or goes sideways, and then New York does the opposite of Asia. And so you can see these kind of like buttons that they push, like expansion, consolidation, retracement, and it's basically these four ideas here. You have expansion, retracement, reversal, consolidation. Expansion, retracement, reversal, consolidation. And there's these market makers just pressing these buttons, taking all of the money. The money buttons. So, yeah, the 4-hour time frame looks like it's just getting started though. So, and you are seeing those fatigues on the Williams. However, on the higher time frame, fib level, if it holds this 30,242, you could see that last push up to the 31.2 region. We were talking about that one last pool up there, but I'm not sold on the idea. I'm looking for the retrace into that juiciness below, that 22 billion below. Yeah. But as these shorts start to open their bubbles and the bubbles appear bigger than these long bubbles, then they could kind of do the retracement button up to grab them before continuing and expanding down below. So is the narrative starting to shift? Are we starting to smell the end of the impulse to the upside here for at least the interim to come back down to these regions to start to test support? I don't know, but a bear rises on 2 feet before they attack, just as a bull gets low and points their horns up as they rise. So are we a bear standing on 2 feet right now? I don't know. Definitely bulls don't start to attack while they're standing like this, so this is why you wait for these retracements to lower zones. If you paid yourself from here to here, you patiently wait for it to come to your consolidating regions, your confluence regions, your ordo ab chao regions. I was teaching some kid today about the Latin behind the words. He was trying to procrastinate to do some work, homework, busy work, whatever you want to call it. And I was telling him, like, he was like, I'll do it later. And I was like, there is no later. It's only now. And I said, come here, carpe diem, man, seize the day. You gotta learn these 2 words, like, let's do it. Telling him to get to work. So the 4-hour just closed beneath the 786. It looks like that 4-hour close just locked in some stochastic reset as well, which opened up these KD lines of the stochastic RSI. And this duckbill platypus started to poke his beak out a little bit, saying, what's up? And so it could create that gravitational kiss to the cloud on the 4-hour. If you break this ATR at 29,753, then the bearish narrative starts to form on the 4-hour time frame for at least coming back into these guys we pointed out a few days ago that are still on the table for the taking. Let us see what you would like me to do from here, and then we shall call it a day. All right. Wow, shout out to everyone here on the live. Facts though, I don't know what people are waiting on, so it's worth best indicator in the game. Yes, thank you very much. Yeah, I guess it is a lot to take in at first, but if you just watch the live, you know, we go over the same thing every day, the baselines, the Cloud, the Keltner channels, the outskirts of the Keltner channel that we're on right now. We did get powered off of that, but if we break within the Keltner channel, coming back to the Cloud is not out of the question, and going below. So it just gives you these levels, these dynamic support and resistance levels, unlike anything out there, and they are accurate to fibs and everything. Like, I don't know, I back tested the heck out of this thing to make sure it is the stickiest, most, you know, accurate thing. Had I listened to the indicator and not my feelings on Sunday, I would have seen all of these 5 screaming to get in here, and it didn't lie. It just told you that perfect entry to get in. So yeah, it's a pretty interesting formula. It knows more than me. It is looking at 32 different things at once. So the fact that it was holding this with all these screaming green buy signals could have been the clue to the upside play. So that is about it for today. Did you guys want anything to be looked at before I go into my try to do some scalping on the stock market for my evaluation? Let's take a look. I like this song. It signals that I'm reaching the end too, so it's kind of like this head bobbing track. Makes you want more. Well, on that note then, I shall bid you adieu, ladies and gents. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will do the same in turn. So thank you for coming on in, and I will catch you on the flip side. Peace.